Hi, this is the housing coach Matt McGrath, and I wanted to share with you a tool that I put together that can help take some of the question marks out of home buying. This is a calculator that you can use to quickly determine if a particular property you're considering will work within your budget and if it fits the loan parameters for which you've been qualified. Now, we give this tool to all of our clients, but we're also making it available to the free coaching club members as well through our site at www.housingcoach.com. Now, before I go any further, let me say that there are a lot of potential variables when it comes to calculating your costs. That being the case, you need to know that these figures are only estimates and they're designed to give you a ballpark indication of whether or not a particular property will work for you or worth considering as a purchase. Now, if you are one of our clients, then your version of the calculator will have some additional functionality than that of the calculator from our site. All of our clients will receive a pre-approval from one of our trusted lending team members. Now, that qualification is based on a maximum monthly payment, and some of that functionality, which is a bit different, is that your monthly payment will already be pre-programmed into the calculator. So and there will also be that indicator there where you see it screen. That'll be the indicator whether or not you are in or within your budget or within the parameters of the loan for which you've been qualified. I'll show you that in just a minute. We're going to go ahead and we're going to use the client version of the calculator for this video. So if you've got the other version, you're going to see that there's some differences overall. But if you become a client, then we'll get you upgraded right away. Either version of the calculator, you're going to find that the only data that you need to enter or really worry about putting in is on the left-hand side in the gray boxes. The calculations that are based on your entries will show up on the right-hand side of the calculator. You'll also see that the information that you are asked for is broken up into different segments. The first, up here at the top, is based on the financing or the loan parameters for which you've been qualified. This you'll really just likely fill in once and really only have to update if the rate changes before you purchase. The second section is in regards to the transaction or the property, as far as the contract price and the down payment, the taxes, association fees, and such like that. The third section we'll cover more in a different video, but really more optional functionality that's built in here as well. And the fourth section down at the bottom is for closing costs that you might be using to override. And what I mean by that is we've got some basic closing costs that are already pre-built into the system. And let's say you get a homeowner's insurance quote, and it's a little bit more or a little bit less than the homeowner's insurance that shows up in the sheet. You can come over here, type in the homeowner's insurance amount, and that will override the homeowner's insurance on the right side of the screen. So let's go ahead and run through just a quick scenario overall so you can see it at work. Let's start at the very top here. It says the type of financing. Now, for this demonstration, I'm going to go ahead and use FHA. Now, you're going to notice just below here when I do that something is going to change. It's going to ask you an additional question. So I'm going to type in FHA, and then down here it says, do you want to finance the Upfront MIP? Now, that wouldn't apply for a conventional loan, but with the FHA there are some additional costs, one of which is the upfront mortgage insurance premium, and you've got the option of either paying that upfront or having that added on to the mortgage amount and being financed. For right now, I'm going to go ahead and say yes, so you can see that additionally over on this side then, when we have that calculation, it'll be added in as well. So the second thing that you're asked is the length of the loan, or the term of the loan in years. So we're going to say it's 30 years. Then it asks for the interest. Let's go ahead and take a look. Today's interest about 4.34. We're going to go ahead and put in 4.34. Then it's asking, is this a fixed rate loan? We're going to go ahead and say yes, it is a fixed rate loan. If you have your credit score, this is an optional field, but it'll help you get far more accurate results if you enter your credit score in here. Primarily if it's a conventional loan. If it's a conventional loan and you don't have a full 20% down, then you're going to have private mortgage insurance. That private mortgage insurance will fluctuate based on your credit score. If you don't put anything in, it'll choose a medium score that's already built in automatically. So if you want a more accurate amount, put in your credit score, and it'll either raise your payment or drop your payment based on your score, whether you've got a good score or a bad score. Or should I say a challenged score? Yeah. Okay, so below that, then we have the contract details. So we're going to go ahead for this example. We're going to go ahead and say $300,000 is the purchase price, and as soon as we do that, you're going to see that the minimum down payment is automatically calculated for FHA, which is 3.5%. Now you may be thinking, well, maybe I'm going to put some more down. We'll check on that in a minute to see if we need to. And for this example, we're going to go ahead and say that the taxes on this particular property are $5,000 and that there's an association fee of $150 a month. It's a town. Let's say this is a townhouse that we're looking at. Now I've got a spot in here for the city. This comes into play because and again, this is a difference between the client version and the site version. The client version, we're asking for the city and the date of closing. The city, because there's transfer stamps that are built in, and typically in Illinois there's state and county taxes which are customarily a seller charge. However, individual towns and villages and cities have additional transfer stamps that they charge, and sometimes they charge the seller, sometimes they charge the buyer. For instance, Addison charges the buyer, Aurora charges the seller. The city of Chicago splits a larger charge, and both the buyer and the seller are each responsible for half of that. So depending on the city, that will fluctuate your closing cost here as well. For this demonstration, I will go ahead and put in Addison, as we know that there is a charge there for the buyer. And the date of closing, I have that in again for the client version because let's say you close in the middle. We're into April here, so let's say we're going to close in the middle of April. We're going to close on tax day. So I'm going to go ahead and put the closing date. What that does is if we close in the middle of the month, we're going to have to pay an interest charge from the date of closing until the end of the month. So that by putting this date in here, that will go ahead and calculate that interest payment that you'll need to put in. The other sections down in here we will cover in another video, but if you have discount points, or if you need flood insurance, or let's say you're getting a closing cost credit from the seller that you're negotiating in, that's where these will go in here. And down below again is if we're going to override any of the closing costs. So right now, with the information that we put in, we can see that our maximum monthly payment is $2,250. That's what we were qualified for. The monthly payment based on these parameters is over, and you can see that it's in red. It's saying nope, you need to go back and either put more down or negotiate a better deal, or something needs to change in order to make this a workable deal. So let's say you've got some additional down payment. Let's see if we put $20,000 down, just what that will do. No, that doesn't quite get us there. All right, so we need, let's try 30,000. And now 30,000, we've got, it's now in yellow. It's saying, well, we're close. We're within a margin, and this is where you need to talk with your loan officer to determine whether or not it's you've got a little bit of wiggle room within your qualifying payment. So let's say for this point you don't, and we don't have any more to put down, so we're going to go ahead and have to negotiate a better deal. So let's negotiate a better deal at 290,000, and now you can see that payment works. We're within our qualifying payment. The closing costs on that are estimated here at $5,753.97. The total cash that you would need to close was the closing cost plus your down payment, and this would be your initial mortgage amount, and then because we're financing the MIP, that's the actual mortgage, the total mortgage amount. Looking at the payment breakdown, right below that, 1305 would be your principal and interest. Then your taxes, your property taxes, which is your annual divided by 12. Your homeowner's insurance, which again is your annual premium divided by 12. And your mortgage insurance are all built right into that payment, as well as your association fee. Now, you wouldn't pay your association fee to the mortgage company, but that tells you what your full monthly payment would be, because that would be included in what you're qualified for. So below at the bottom here, we've got the closing costs, all itemized based on the information that you put into play. Again, these are all estimates, and if you've got other numbers, for instance, that homeowner's insurance right here, the calculator is saying that it's going to be about $920 a year. Let's say we get a quote from your insurance company and they say, no, we can get you a better deal because you've got multi-car discount and life insurance. We're going to be able to get you down to $850 a month. So we plug that in. We can see that it has overridden over here. It's now $850. Okay, so that is the overview of the estimated buyer cost sheet. If you have any questions, please give me a call. You can reach me at 630-971-2220, or you can send me an email or contact us through our site. We are here to serve, so take care and be blessed. Bye-bye.